Let's talk a bit about some other policy things we're watching in terms of the U.S. market. And let's start with the chair of the Fed. If President Trump wins, what happens?
Yeah, he's been very clear that he would replace Jerome Powell, who he appointed in 2018, but Jerome Powell's term ends just about exactly 2 years from now. And Trump is very vocal that he would allow someone in who's going to be more dovish, more sympathetic to the whims of Trump and the rest of the Republican administration. This is highly controversial. It's not clear he could do it, but he's been very vocal that this is something he wants to do.
Yeah, keeping someone who's more dovish in inflationary times, and yes, I mean, everyone's wondering that. What about industrial policy? Again, you talked about kind of either one of the key things to watch was the reversal of globalization. I'm assuming that continues with both coming into office.
Yeah, I think you'll see either one. You'll see it. The onshoring, there's an identification of what is critical to the nation itself. So the CHIPS Act in particular was that. Yeah. And there's billions and billions of dollars being poured into that. It may not be very efficient, but it is going to happen. And pretty soon, if you went out 5 to 10 years and look at some of the forecasts, the production of key chips physically in the United States could rival that of what's produced out of Taiwan. Maybe not the same quality, but the volume will be there.
And the quality, I think, would come over time as you do more, I would expect. But it is starting all over again in a lot of senses.
The problem is the labor force and the learning. It's a big issue. In the book Chip Wars, which is a really good read, it gives you a history of chips all the way back to days of Texas Instruments and Fairchild Camera. It goes back a long time. And then it walks through how the Americans kind of owned that. Then it went to Japan. And then it really wound up in Taiwan. The expertise of TSMC is unparalleled in manufacturing. They don't design chips, they manufacture them. Yeah. They're the best in the world.
Yeah. Deregulation, another thing we're watching. Again, this I assume depends on who comes into office, but maybe give your thoughts there.
Yeah, so if we do have a Trump administration from November, he's been very clear that he'd like to roll back a number of the regulatory measures introduced by Biden. So energy is certainly one area. The finance sector is a second one. Tech, I think, is pretty big, particularly in terms of antitrust. The FTC and the DOJ have been very active in antitrust. So this would give a green light, I think, for the big tech companies to go back on an acquisition wave. And I think we could see from Q1 of next year a boom in M&A activity. They have a lot of cash. There's a lot of abilities they would like to acquire. And I think that could be very interesting.
On defense, we touched on defense earlier as well too, but we know that President Biden, from a policy standpoint, favors a multilateral approach.
Yes.
President Trump does not.
Yes.
So implications.
Yeah. So Trump doesn't favor a multilateral approach on anything,
no.
whether it's trade, any type of policies, and certainly on NATO. And in some sense, he's quite right. And this goes back all the way to Eisenhower, that U.S. presidents have been critical of other NATO countries for not spending enough. And I think he's right, but defense, I think by most NATO countries, I think by most of the sort of Cold War adversaries of the United States and other Western countries, China, Russia, Iran, and so forth, there's defense spending increasing. So I would say almost globally, the defense sector will continue to boom.
Yeah, any thoughts, Bill?
I would totally agree with that. And I think when you look at Europe, you will see a substantial increase from those countries on defense. They are kind of in no man's land. China's eating away at the automobile industry, for example, which is so important to Germany. In Russia, just to show you what's happened in Russia and China versus Russia and Europe. Last year, the Russia-China relationship dominated exports and imports vis-a-vis the interaction of Russia with Europe. In fact, it's now the volume is simply 2 times greater than it was before. The 6 leading cars purchased in Russia are all Chinese today. The currency used for trade is the yuan. It has been a huge loss of market share to Europe when you look at what this war has cost them. All the sanctions, Russia said, okay, it hurt for a while, but guess what? Iran is now buying, all of its oil is going to China. Most of the Russian oil is going to some of the other nations that are hostile to the United States. Europe is becoming a little bit of no man's land in terms of their ability to compete.
It's fascinating times. I want to finish up talking about what this all means for the markets, maybe specifically equities. We've got a chart here, I know, that was part of your paper that you both put together, if we bring it up, which shows, I think, the performance of S&P 500 and sectors post President Trump. Maybe give me your thoughts of maybe, can we expect something similar to happen, or what you might see going forward?
So the bullish arguments would be fiscal stimulus, particularly tax cuts and deregulation. This is strongly favorable for EPS and the markets overall. As Bill was emphasizing, the headwinds would be inflation, higher interest rates, and so forth. But at least by sectors, it seems to be a good outlook, I would think, for finance and tech, which also did very well during the first year after Trump's election in November of 2016. And we could see something similar happening this time. History doesn't repeat, but it does rhyme. And I think there could be some similarities.
Right. We would agree with that. I think there was a book, it's a long time ago, but it walked you through the economic trends that affect profitability. And what it showed you is that when you start to substitute technology for labor and physical assets, you create a winner-take-all kind of end game. So if you are the dominant player and you have the lowest cost and the best technology, you will eventually wind up with 100% of the market. And one of my favorite examples we were talking about is Uber. I mean, it is very difficult to see how Uber doesn't have a great future.